All right, everybody, welcome back to part two, in which Andrew and I will share our outlook for the world of stocks, the world of investing in 2025. Welcome back, Andrew.
All right. Hi.
And we're going to start this video with something I've been looking forward to. We're going to do a quick fire round, or a quick question fire round, in which I'm going to ask you, what is it, like 8 to 9 questions in total,
All
with the
right.
premise of you trying to answer each in a sentence, max,
Okay.
maybe two
All
max.
right. Let's
So let's
try.
go through the list before
I
you
see
find the
that
time to prepare.
I see that there's a lot of speculation here. So let's
Yeah, yeah, 100%.
yeah.
So don't take it at face value what Andrew is saying
All
here.
right.
Bull or bear market in 2025?
Bull market 2025, bear market 2026.
Okay. Best performing asset class next year or this year?
Stocks, bonds, real estate, crypto. Stocks. I would say, yeah. Stocks and crypto depends how crazy people get.
Yeah.
Stocks.
What do you think is the stock that is priced for perfection in 2025?
Priced for perfection, meaning like they're up on the upper range of their valuation.
Yeah.
Um, Palantir.
Yeah. I would have been disappointed if you didn't bring up Palantir here.
Yeah.
What's your favorite stock to hold for the next 5 years?
For the next 5 year, a tie between Meta and Interactive Brokers.
Great.
Yeah.
Which trend do you think will dominate 2025?
Um, I hate to say it's going to be cliche, but AI again. I think that's going to be a multi-year
Yeah.
trend. Yeah.
Yeah. Hard to come up with anything else. Maybe robotics related to AI would be another thing
Yeah.
that comes to
Yeah.
my mind.
A subset of AI, something AI related.
So that's the most interesting one. If Buffett made a big move in 2025, I mean, he's sitting on 300 billion in cash. What would
Mhm.
that be?
I'm trying to do this quickly. I'm trying not to give it too much thought.
Not that easy. It's a tough one.
Probably, I actually probably buying. So if he had to buy something, I would assume he'd probably just buy an entire
Yeah.
insurance company out of like Canada or something like that. But I actually have a hot take on Buffett, but this is rapid round, so I won't say it. But I think he's intentionally selling, and it's not the reason people. Well, I know he's intentionally selling, but I don't think it's the reason I've ever heard online. I think it's a
Yeah.
completely different
Yeah.
reason.
Let me just say here real quick, as I
Yeah.
told you off the record, I'll be meeting with Theo Berkern in 2 or 3 days. And this will be part of our conversation. So I'm looking forward to hear what you think of
Yeah.
what Theo has to share here.
Yeah.
And I think he shares your hunch here. Okay, next one.
All right.
Overrated or underrated buybacks as a capital allocation strategy?
Uh, Overrated for most companies, underrated for kind of other companies that are good at capital allocation, I guess. Yeah.
Terrific answer. And last
Yeah.
one, which global market do you think offers better value than the US market in 2025?
I would say Canada just because it's the one I'm the most sure about other than America. Um, I guess on a valuation basis, probably like Europe and the UK, but their politics are getting like overly bureaucratic, so I'm not too sure how that affects
Yeah.
their capitalistic companies.
Yeah, maybe more structural problems than in
Yeah,
Canada.
yeah.
Awesome. Thank you, Andrew. I think those
What
were
about you?
some.
You have to run through it. You have to run through it.
I have to run through them. Okay.
Yes,
So
yes. So I'll read them to
my
you then. Let's go.
okay.
I'm sure your audience is dying to hear. Okay, Renee, bull or bear market in 2025?
I also feel like we'll have another bull market, but that may be recency bias. So
Could be. Yes. Best performing asset class for 2025?
probably crypto.
Crypto, good answer. Yeah. A stock you believe is priced for perfection in 2025. And it can't be Palantir, it has to be something
Oh, it
else.
has to be Palantir. What else? Some.
Do, some fast food companies actually came to my mind in grocery stores. Costco, Sprouts Farmers Market.
Oh, Costco's a good one too. But
Yeah. It's a
I
great
mean,
business, but it's priced like it's always going to be the great, like one of the greatest businesses, which it very well may be, but I don't know.
no, you might be aware of the video I did in which I talked about the quote unquote bubble in quality stocks. So there are a few
Yeah.
names that come to mind here that you could bring up. Ferrari would be another one.
Yeah, Wingstop,
massively.
Wingstop, like these a lot of these restaurants too. Wingstop comes to mind.
Yeah,
All right, favorite stock to hold for the next 5 years.
for me it would be Wise.
I was going to say it can't be Meta or Interactive Brokers, and I knew you were
Yeah,
going to say
they just
Wise.
reported their next quarterly numbers today, and the stock is actually down a little bit because on a not adjusted and not for currency fluctuation adjusted number, the I think the operating income was quote unquote only up 13%. But similar to IBKR, the key metric here is the number of customers, and I think that number was
Yeah,
up 25% again. And I expect this trend to continue for many quarters.
yeah. Everything you told me about that company, I was totally on board with you. It just wasn't in my kind of in my sweet spot. Okay.
What weight does it have in your portfolio now?
Yeah. So for the viewers who don't know, who are wondering why I bought it, that was me putting faith in Renee. So he and I are very good friends. And he sold me on the pitch. It's just I couldn't pull myself to do it simply because I had too many questions surrounding it. But like my hunch told me, I think Renee's right on this one. So I did make a position. It's very small. I think it's about a 2% weighting in my portfolio. But I will say we're up like 40%. So great call, Renee. No. So it's only been less than a year, so anything could happen.
Yeah.
All right. One trend that will dominate headlines in 2025.
Yeah, as I said, maybe robotics. I don't know.
Yep, good. Hot stock for 2024, you'd avoid in
Yeah, I
2025.
skipped this one because I felt like it's very
Yeah,
similar to the price for perfection one, I think, right?
yeah. So Palantir.
Yeah.
Yeah. If Buffett made one big move in 2025, what would it be?
Yeah, that might be the toughest one of all the ones mentioned here. I don't know, maybe he's going to just continue buying oil stocks like he did for the
Yeah,
past 2 to 3 years. But then again, that wouldn't be like a move that would allow him to
yeah.
deploy
A,
hundreds
ju-
of billions.
a
His
juicy.
his
Oh, sorry. Go. Sorry.
I
Lied.
was just about to say his investing universe to deploy that much capital is just so limited unless we have some major crisis where certain companies have a need for liquidity. I don't see him deploying that amount of capital anytime soon.
Yeah. I'm gonna say a moonshot call, right? I don't actually think this will happen, but I'm just gonna say it in case it does. Your
Hmm.
viewers heard it here first. Is that they acquire Brookfield Asset Management for not only their assets, but also for their management and capital allocation.
Hmm. Yeah,
Like I
yeah,
could see
like
that
that.
happening. I don't think it actually would, but yeah.
What kind of market cap are we looking at here?
Jesus,
No.
I don't actually remember. I'll be
Yeah,
honest. I
yeah,
want to say it's
I don't remember
I
myself,
don't even
but
want to take a guess because I'll probably be way off. All right. Overrated or underrated buybacks as a capital allocation
I
strategy?
can't top your answer. I think it was brilliant. I would have only said underrated, but you're right. It's overrated by, I guess, the corporate world in the US generally,
Yeah.
because it is actually used as a capital allocation strategy much more frequently compared to Europe, for example. But then again, it only adds value when you do it sensibly, which many management teams do not
Yeah.
do.
Well, what I will say, like with it, it's really used as a way to pay employees without paying benefits. So all they're doing instead of paying an employee, and let's say they have like a 401k match or whatever else it may be, they pay an employee, then they have benefits tied to however much they're paying them. So that's an added cost on top of however much they're paying them. So instead, what they do is pay them with stock options, and then take that money that they would have paid them, give them the stock options, and then buy that stock back. And that way they can avoid paying extra into benefits and all that stuff. I mean, it's a pretty standard strategy they do.
Yeah.
It's kind of like it's financial, it's like pay engineering or something for their employees. All right, a global market you think offers better value than the US in 2025?
Yeah, I'll give a very controversial answer here, and I have some other like countries that I want to bring up later in the video. But the most controversial answer I could give is probably China.
Yeah, yeah. I had a hunch you were going to say that. Yeah, I don't know. I can see both points of view with China. I will say that. I'm not a conspiracy theorist or anything like that, but both points of views, everything I've seen develop over China over the past few years, I can see both points of views. And once again, it's just like, Nvidia or something like that. I don't know enough about it to make an educated opinion, so I prefer just
And
to kind of
what
stay
I
away.
will say is, Like I only once owned a Chinese company, and that was Alibaba.
Mhm.
And I'm quite happy to be out of the Chinese market, quite frankly.
Yeah.
However, I do see why you would be interested. We are looking at an economy that is destined to continue to grow at a solid rate over the next couple of years and decades. You are looking at some truly world-class businesses that are trading at super cheap prices, and that setup
Yeah.
generally leads to great returns. So, but I guess, and this goes back to what you said about Wise, for example, building the conviction to actually own a basket that is material in size in Chinese equities is another
Yeah.
thing, and that's probably something hard to do unless you have some
Yeah.
connections to China, or travel there frequently, talk to business people there. Yeah,
Yeah.
I don't do that.
Yeah, I've mentioned this before, but if you don't have conviction in a company, even if you're right on the call, you can't really kick yourself in the butt too much, because if you were right on that call without that conviction, after a 15-20% gain, you're gonna cash out. I mean, so
Yeah.
so yeah, maybe it's up 2, 3, 4 a fold, but I mean, you would have cashed out at a 20% gain anyway. Don't tell me you wouldn't have.
No,
So
100%.
yeah.
Yeah. Speaking of the US market, what's your take on the current valuation of the US market? I feel like
Yeah.
you will
I
encounter headlines all over the place stating that the market is approaching a peak, and that expected returns are going to be
yeah. It's
suboptimal.
I mean, there's certainly pockets of the market that's I don't want to give such the
You are
cliche answer.
exclusively invested in US stocks, aren't you?
Yes, with the exception, I guess, of Wise.
Yeah,
But
yeah,
yeah, or
yeah.
and another small speculation company which is out of Canada. But yeah,
Mhm.
like 99% US. Um, yeah, I'm mixed on this. Like the valuations, obviously, like any normal metric you look at, like we're obviously very expensive. Even we talked about in the, I guess now for the viewers, the prior video would have been, the concentration risk that we're kind of facing kind of leads you back to the 1999 bubble. Um, so like, yes, valuations I think are stretched. I think there's certain companies that are pretty expensive, but I mean, I just don't know. To me, people aren't. It's not that I think we're like in an obvious bubble or anything like that. I think there's certain companies that are. I think there's certain companies that are extremely cheap today. I do think there's a wide discrepancy or a wide variation of companies that are really doing well in today's economy, and traditional companies that typically do well that are actually struggling, right? So I think there is a vast divergence. So I think certain valuations, the wide discrepancy valuations are justified. Um, however, shoot, I lost my train of thought again. Forgot where I was
Yeah,
going.
yeah. Let me just add that. I mean, basically, you were describing that there are certain pockets of the market that do seem very stretched, but I think there are also other pockets, or maybe just individual names that are more attractive, maybe. So we
Yeah,
talked about Celsius, for example, on this channel not too long ago, and I feel like the evaluation there, while it's not at a point where I get overly excited, I don't think it's particularly demanding either.
yeah,
Today, I'm not sure you have an opinion on it, but the stock of Dollar General is also down like big time over the last 2 or 3 years. So I would
but
have
they're
to dig
struggling.
deeper
But that,
here.
but that's what I
Yeah.
mean. That they are struggling, like and struggling bad too, and like they have a lot of debt, and that's what I mean. Like some of these valuations,
Hmm.
they've come down. The valuation multiples have come down, but the risk of these companies have gone up, right? So
Yeah.
like the story is kind of flipped on a lot of these companies, which
Hmm.
is interesting. I remember what I was going to say though. So once again, it doesn't seem like all of these companies are obviously in the bubble, but what it seems to me is that investors just are not demanding as much as I feel they should for the risk that they're taking. So, for example, if you do a basic valuation, right, cash is yielding what 4.5% right now. Sure, you could use the typical back of the napkin math of maybe free cash flow plus growth, however you want to do to value a company. Okay, at something like an Apple, maybe it's 3% free cash flow yield today plus maybe another, I don't know, I'll pull a random number, 5% growth, let's call it. Okay, maybe that gives you an 8% short-term return. That's obviously far better than 4.5%, but there's a risk premium that investors typically demand, which I just feel like we're not getting. So for example, if you don't get that growth, or if that multiple comes down a bit, you're not getting your 8% return. So I don't know. I feel like, based purely on a mathematical standpoint, yes, stocks are still technically cheaper than cash. I just don't think that risk premium that you investors typically should be demanding. I just don't think that they're getting that right now. Um,
Mhm.
that's all. That's kind of my
Yeah,
viewpoint
I
on the
would say I have
valuation.
a sort of unconventional take on that whole equity risk premium debate. Like I get the logic behind it, but the
Mm-hmm.
way I have always thought about it, also during the zero interest rate period, is that I, as an individual, I demand a specific return, and that's going to be the hurdle rate I use to value stocks and to find investments that meet that hurdle. And as many other participants, market participants, view it differently, it makes sense to me that, say, in a high interest rate world, stocks across the board will be trading at a cheaper valuation. For me, this only means it gets easier to find stocks that meet my hurdle rate.
Yeah,
Besides that, it
I
has no
agree with
impact on
you.
how I value businesses. Yeah.
Yeah, no, I sorry guys, there's a lag. So if you see me cutting Renee off, sometimes there's a small lag. But yeah, no, I agree with you on that. I was more so talking about kind of how corporate finance typically values
Yeah.
companies, and they're not demanding that typical premium that they normally would.
Yeah.
I
Yeah.
fully agree with you though. Yeah, when rates go up
No,
and
we are both
valuations come
agreeing here.
down,
Yeah.
yeah, when valuations come down, obviously that gets more attractive.
I want to share one more chart here that I also found like super interesting, and it was shared by Matt Faber. And basically, it shows the sentiment among investors over various years. And without digging into too deep into the methodology of well, how they calculated that sentiment, I found the following takeaway interesting. So on the left, you see basically the score, and when the score has been quite high, meaning well, the sentiment is very bullish, the subsequent returns in the following year for the S&P were in many years rather disappointing. Compare that to the right-hand side of that chart here, where you see where the sentiment has been more bearish, pessimistic. More often than not, those periods were followed by a year during which the S&P performed exceptionally well. And that sort of is a different metric to take into account here, aside maybe some of your typical valuation multiple metrics like the PE ratio of the S&P or the Schiller PE ratio, things like that. Anything to add here?
No, nothing to add, but it's interesting. I've never actually seen that chart before. It's interesting. Yeah. I don't
Yeah.
know how much weight I would put into it, but
As
yeah.
that would be something I could ask you here, as stocks are much more broadly accepted in the US society, do you notice that in your social circle, people are talking more frequently about stocks?
Well, so yeah, so that's actually I've decided that that's going to be my clear market indicator of a
Uh-huh.
bubble, which is why I'm hesitant to say it now. I do see more and more people talking about equities in the stock market and Trump being in, whether they like him or not. Certain people talking about stocks probably going up because I think business will get better, right? Like I was speaking to one of my truck drivers yesterday, and they said, I think stocks are going to do better because all of this AI technology and because I just think the economy will do a lot better. And that's like, wait, that was his base knowledge, but he decided to talk to me about stocks, and I was like, okay, that's a red flag. And then my brother-in-law, I've told you about this. He was telling me about all this crypto he's been buying, and he's up like, I don't know, 300% or something. So more red flags. Now I haven't seen it widespread yet across
Mhm.
social media like I did in 2021. When I saw everyone and their mother being a stock guru in 2021, that's when I knew that, there was probably reckoning coming. I haven't seen that level yet, which is why I called for 2025 being a bull market and 2026 being a crash, because my speculation, right, pure speculation, is if we keep seeing markets and crypto go up in 2025, maybe we might see everyone become a stock guru again, and then maybe 2026 all hell breaks loose. But purely speculation.
Yeah, yeah.
How about you?
And, like I was referring to the US as a country where I feel like the ownership of stocks as a percentage is much higher than in Germany, for example. So usually you don't really sense it in your everyday life. I would say that among the younger generations, say people in their 20s and 30s, stocks are much more accepted as a way also to save and invest money for your retirement. But I would just think that in the US you get a better sense of that just talking to your friends because I don't know, 9 out of 10 people my age aren't into stocks. So
Yeah.
it's not as clear of an indicator here, I think, as it might be for some people in the US, depending on where you live, of course.
Yeah. 9 out of 10 people my age are only into stocks when stocks keep going up. So I mean, yeah, when uh, um or whatever, the other 9 out of the 10, yeah, the 9 out of the 10. So yeah, when those 9 out of the 10 start becoming interested in stocks, yeah, usually it's a red flag.
Yeah. Moving on, I want to discuss which sectors and which regions might be overlooked right now. I already brought up China. What did you bring up in our quickfire round question
I think
segment?
I said Canada, although I don't really go
Canada, yeah.
shopping in Canada either. Although I'm comfortable investing in Canadian companies, though that wouldn't bother me.
Yeah.
But
I guess the two, or at least the other obvious one that you also briefly mentioned would be Europe. But then, as
yeah,
you highlighted, Europe as a whole might look optically cheap
yeah,
compared to the US, but there may also be very good reasons for that.
yeah. I think they're becoming far too bureaucratic for
Yeah.
their own good.
But what I will say, Andrew, is that that's the beauty of being an active stock picker.
Yeah,
Maybe the region as a whole gets punished by quote unquote the market, but there are of course some exceptional companies operating in Europe too that may then be trading at a price that will yield attractive long-term returns just because the region as a whole is unloved. The other region or country actually I want to bring up here is Japan. Actually, I ran a stock screener the other day with well certain criteria that I like to see in stocks, and I was actually surprised by the number of stocks that matched those criteria. I guess I think Japan would be a market you would never be interested in because it's just a
no,
completely different culture, and as a result, it's very hard to develop conviction in the business models, especially if they operate primarily domestically. I would say personally, I'm probably more comfortable making an investment purely based on numbers or primarily based on numbers once we get to a cheap enough valuation. But that would be another region I would like to bring up here, especially, and you might be aware of it or not, that sort of Japanese companies are highly incentivized or in some way actually forced to change their capital allocation
yeah, to
strategy.
put their
So that
cash to
might
work.
also be a tailwind for Japanese stocks.
Yeah, I've thought about it, but yeah, I agree. Definitely, you'll be more into Japanese companies than I would, but yeah, just not in my wheelhouse.
Yeah. And then in terms of, actually, I have two more things here. So maybe in terms of sectors, I want to bring up the luxury sector. So I think the luxury sector as a whole is pretty unloved, although I saw that today or yesterday, the or many stocks in that sector actually moved up significantly. I think one of the luxury names reported numbers and reported really good numbers, and as a result, many of the luxury names were up 5, 6, sometimes 8%. So maybe there is a reversal of the sentiment, but I think there are opportunities to be found too in that particular sector.
Yeah, I've never really been into pure luxury, so just. But yeah, there's definitely some cheaper valuations than so. My most luxurious company is Yeti, and that's like pseudo luxury. It's like blue
Yeah.
collar luxury or something. Yeah.
I like that term. Yeah. And finally, the other sort of contrarian view I would share here would be small and micro caps. I think the underperformance of this basket of stocks over multiple years now is almost unprecedented. And I think that's also always a recipe, or shouldn't say always, but often a recipe for finding opportunities, like looking
Yep.
at such a basket of stocks.
Yeah.
Okay, I'll skip this. I want to wrap it up by discussing AI one more time. So we briefly discussed it in our last video, in which we just highlighted that AI has been a key theme in 2024. How do you think about AI in terms of the disruption risk to some of the businesses in your portfolio?
Yeah, most I don't think about it often. I have to be honest with you. I mean, most of my companies I hold, AI has nothing to do with them. And the two or three that AI does have to do, I mean, the obvious one, right, is Mark Zuckerberg, Interactive Broker. I mean, Meta, and Mark Zuckerberg heading that. Like, I mean, if anyone's going to take advantage of AI, I think it would be him. So I don't have any kind of concerns there. They've been implementing AI for years anyway. Um, and then interactive brokers, I don't see how AI would be a risk, really. Like, I mean, I'm sure you could point to a couple risks there, but I think companies like Robinhood, interactive brokers, I think by and large, all of these brokers who decide to use AI for coding reasons or whatever else, I think it's just going to be a benefit to the industry as a whole. I don't think it's going to really give certain companies too much of an edge over others. And then PayPal. PayPal,
Mhm.
once again, I don't really see how there's a direct risk to the business model itself. Not on my thesis anyway. Um, so yeah, I don't have like too many. I don't have any actually pure play AI companies anyway. How about you though? What about you and your
Yeah,
portfolio?
I'll mention a couple of names in a second, but before I do that, I just want to highlight that John Miajevich, I probably butchered his name, but people will see a screenshot of the name on screen. He wrote a great article on how AI might be a truly disruptive force for many industries, and that many investors might be underestimating that. And I tend to agree with him here. Going through my portfolio, like a couple of names come to my mind, and I think obviously it really depends on your portfolio setup, how actively you have to think about this risk. Obviously, if you have a more tech-heavy portfolio, you will probably have to think about it more carefully than if you are running a portfolio mainly consisting of industrials. I would say the two names most prone to be disrupted by AI would be first and foremost Google. When we were discussing Google in our last video, for example, I was thinking, and full disclosure, I do own Google, that I would probably not be comfortable owning Google for the next 10 years if the stock market were closed. So that is something I will, or
Yeah.
a position I will definitely have to actively track. Yes, just because obviously large language models represent a very real risk to their core business. So, and I can't even say that I'm super bullish on Google's core business. I'm probably more bullish on many of the other business divisions. But then again, I also don't think that Google has lost that race yet. I think
Yeah.
OpenAI certainly has a head start here, and Google is now forced to catch up. But I also do sense that Google's management team realized that they have to execute better in the next few years if they don't want to lose that race.
Yeah, I think the big thing with AI is just going to be like who's in charge, like who really is the visionary, who's going to embrace it, and who's going to be kind of controlled by their board of directors to say no, we can't take any risk, and we have to just keep milking what's making us money now. And that was my fear with Google. i
Mhm.
i think they're probably controlled more of a board who cares about short-term profits than someone like a Mark Zuckerberg who's like, yeah, screw short-term profits, I'm gonna do
Yeah.
what I think is right. So that's kind of where I'd place my bet with AI. Two actually hot takes for the year that I think I forgot to mention earlier,
Mhm.
which I am strongly convinced about. Actually, well, one is I actually think we're going to see a lot of So subpar kind of penny stock, lower valuation companies, I think we're going to see a big step up in acquisitions. I think we're already starting to see that. The second Trump got announced that he was the president, a bunch of acquisitions got announced. I think that is not represented. So that's number one. So like for example, I've been looking at companies like iRobot, right? The same thing. So I think same thing. If you're going to talk about GoPro as a likely winner, you could probably talk about iRobot, where the core business is kind of in shambles. However, they could get a short-term benefit from AI and then probably sell themselves. I know Amazon wanted to buy them, but the previous administration didn't allow it. So I think that is kind of a
That's a
core
good
thing
take.
that we're going to see is a lot of acquisitions moving forward. So a lot of maybe these slightly lower quality, smaller businesses, I think we're going to see a lot of acquisition throughout the year. And I think that leads me into point number two, that is not at all reflected in the stock price of IAC. I think that is exactly why they wanted to spin Angie off right now, is both I think they think Angie is a very likely candidate to be acquired throughout the year once they spin it off. And then number two, that frees up a lot of cash for them to acquire another company. So I think it's a twofold. I think Barry Diller is very smart, and as much as I know he publicly does not like Trump, I think he's going to try and benefit as much as he can from the new administration. And then I guess kind of a pseudo third thing. Um, a little small speculative bet I did make this year is just recently. I do not think that volatility. I don't think anything is baked into the options of Angie. So I never buy options. I've only done options once, and that was 2021, where it was essentially an arbitration play that was printing you about 5% a day for like 3 days, and then that gap closed. Other than that, yeah, Angie, I decided to buy calls on. I don't think number one. So right now, there's a volatility factor in options, and the volatility factor of Angie was like virtually zero. I'm already up like 50% on that call just in like a week. Just so I think when IAC decides to sell off their stake, the volatility of Angie is going to pick up a lot more because there's going to be a lot more shares being traded. So I think I think the calls are just naturally the intrinsic volatility, whatever that factor is going to step up a lot. And then also, my hunch is that there will be at least speculations on an acquisition. I don't know if they actually will be acquired, but I think there will be a lot of speculation on an Angie acquisition, which obviously would give some upside to the company. So yeah, I bought like $2 calls on it. I paid like virtually no percent for those calls. And it's a very, very small, it's like a 0.5% position. I just, it's almost, I'm not going to say it's an arbitration. It's not. I could certainly lose all that money, but I think the likelihood of doing very well on that, and I just don't think there's a lot of factors baked into those call options right now. Fun fact.
Yeah. Yeah. The developments that I see this week, this week were quite
Yeah.
interesting, and something I certainly also have on my radar. Although what I will say is that before the departure of IC's CEO was announced, I was like, I'm not sure if I'm more bullish or less bullish on IC after this week, because I mean, a CEO departure is always something that can be thesis breaking. And obviously, you've got Dilla coming back, which it's hard to be a negative, but I think he's 82 years old, so that can only be a temporary solution
Yeah, but I think
anyway.
they did this like 3 times in the past though, and
Yeah,
actually this
yeah,
shouldn't have been too surprising because not every time, but most of the time when they spin off a new company and look to acquire another company, historically that's what they've done. They've kicked out the CEO of IAC and let them operate the spin-off company, and then they bring in a new CEO. Like that they've done that like 3 or 4 times in the past. So I mean that's not anything
yeah.
kind of out of the ordinary. But yeah, my big hunch is IAC. Once again, I could be very wrong, but I think the potential of acquisitions throughout 2025 is just being
Hmm.
underpriced in IAC right now. Yeah.
Yeah, Yeah, yeah. And if they successfully divest their Angie stake, well, they have more dry powder than they already have. So yeah, that's actually a good call. Yeah. Just to wrap up the point I was getting at earlier in terms of my portfolio and which companies might be at risk of being disrupted by AI. Just a general comment I want to make, not saying that Nintendo is at any risk of being disrupted by AI, but generally speaking, I think media assets are highly at risk of being disrupted just because AI makes it so much easier to create content. And even movie studios, like I
Yeah.
can see it's not, you don't have to be super creative to come up with a world 5 years from now where there will be AI solutions that will be able to, well, yeah, create entire movies that,
Yeah, there's already mock-ups on YouTube of like of like fan-made
yeah,
fiction movies of certain video games and stuff, and they're using AI, and it's like it's noticeably AI, but it's a very, very good start, like and very well done. So I think I resonate with you on that one.
yeah. But then again, I think Nintendo, even though maybe the entertainment industry as a whole may be slightly at risk of being disrupted, might even end up being a beneficiary just because it gets easier to create games with their IP. It might as a result be more cost efficient for them to develop games. So yeah, you always have to assess it on a company by company basis.
Yeah. I think, like we
Okay.
said before, it's just going to really come down to whichever companies embrace it and kind of can think a little bit more long term. I think they'll do fine. And the companies that are kind of restricted by a board of directors and are trying to
Hmm.
milk current profits, yeah, I think they'll be the ones left in the dust. Yeah.
Yeah, perfect point. Let's wrap it up with that, Andrew. Thanks for your time as always, and
Yeah.
we'll talk soon.
All right. Take care. Bye.